As you have come across fair value gaps and now you know almost everything about it, but there is one question that keeps on coming in your mind, and that is how to take sniper and precise entries on the basis of fair value gap. Now you know the ranges, how to trade it, you know about the trend direction, and you know how to consider or how to draw fair value gap. But the ranges which we have discussed, which are premium and discount, still there will be several fair value gaps. So how to know which one we are going to take for sniper entry and precise entry purpose? If you don't know anything about it, go to the description. I have put the link in the description. Make it clear and then come back. So I'm writing down a recipe. If you are following these steps, I'm ensuring you the sniper entries will follow up. Recipe is first the direction of the trend. Second, to look for these levels, measure them by the Fibonacci tool to know that we are either at premium or discount. Third, fair value gap. And the most importantly, the fair value gap must be adjacent to an order block, or the fair value gap must be in front of an ifvg. If we look closely, there must be an ifvg behind the fair value gap, or there should be a high behind the fair value gap, low behind the fair value gap, or you could say relative equal highs. Or relative equal lows. For example, the market is trading to the downside. We measure this wave with the help of Fibonacci retracement, and this is the 50% area. The market retraces back to the premium area. We will only trade at the premium area in the downtrend. In the discount area, we will trade discount area only at uptrends. There is a fair value gap and we are at premium, but there is also this previous low behind the gap. The market retraces back to this gap and closes in it, or either it wicks through the gap but the candle doesn't close above the gap. So that's our sniper entry, and we will target a fair value gap somewhere at the low, or we will target the area below this lower low. So that's how we will trade fair value gap to take sniper entries. Now let's suppose we are trading in the uptrend direction. It is an uptrend direction. Now the market retraces back to this area, and we are having this an fair value gap. We are having an order block just below it, or we are having an order block above it. The market closes in it. That is our entering the market, which will be a precise entry on the basis of fair value gap. Now let me take you to the charts to show you how it works.
So before I show you examples on the chart, I have write down something very interesting, that is recipe for sniper entries using fair value gaps. That is, the first thing we should look for is the trend. Secondly, it is the range, that depend on the trend, it is trending to the upside or downside. We will look for premium or discount areas. The third is the fair value gap, And lastly, it must be near an order block. It could be in front of an IFVG, a high, low, relative equal high, relative equal low. So I I'm ensuring you, if you are looking for these things, then sniper entries will surely follow up. So according to this recipe for sniper entry, it is a clear uptrend. I have also given this example in my previous video, but as it showed up, I am showing it to you this example again. So we are having an uptrend fulfilling the first criteria. Then let's measure this wave. We are at discount looking for this fair value gap, which is at discount below the 50% area of the wave. uh, I just pull out the Fibonacci tool. It is this rectangle. If we notice, the market is closed in the range, in the gap. Here we are having an IFVG just behind the fair value gap, which could have given us a sniper entry if we had to trade it. If we had traded it, we could have got a sniper entry. So we could clearly see how the market reacted after it. It broke the previous high and created a higher high in the market. Now let me take you a bit to the back side, a bit backward, to show you further examples of how it works. Keep the recipe in mind. Trend, okay, the trend is clearly an uptrend. And now what we do, we measure this wave. Here we are having this fair value gap at the discount area. It is the discount area. We are having the fair value gap. It is near the order block. If you could notice it, this is an order block. The market has not closed, this candle has not closed below the fair value gap, which indicates it is likely to respect the fair value gap near the order block. And that was correct. The market has respected this area. The market moved directly to the upside from this point. It could have given us a very good RR, risk reward ratio. It's the second example. Now let me show you another one. So again, I'm starting it from the trend, marking higher high, lower high, higher high, and again it is a lower high. Now measure the move. This is the 50% area of the wave, and we are clearly below the 50%. So we are at discount area in the uptrend. Now let's draw the fair value gap, which is this one. And if you notice, we are having a small high just behind the fair value gap, which could have been our sniper entry. If we had to trade it, that could have been our sniper entry. and we can see how the market has reacted to this fair value gap, which was in front of a high and which was in the discount area of the uptrend. Now let me take you to the downtrend scenario and show you how these fair value gaps work in the premium area as well. So now we are at the GJ pair, GBP USD, which for short is called as GJ. As we can clearly see, the uptrend ended at this point, especially when the market broke the lows, which was which would have which is a break of structure. Let me write it down. It is the break of structure, which for short is called as BOS. It is also called as CHOCH, change of character. So the change of character has happened. Now the power has shifted to the bears. So as it is the start of the downtrend, or we could say it was the start of the downtrend, even though it was for a shorter period of time, but we could have found our entries using the recipe for sniper entries using fair value gaps. Initially we saw the trend, which is the first thing. Secondly, we will measure this move from the start to the low. The area above the 50% is the premium area. It is premium area. So this was the 50% of the wave. Now let me remove the Fibonacci retracement. Let me also remove this so it will not create any confusion. Now the market has fulfilled the first two criteria, the first 2 points of the criteria. It is the third one, which is a fair value gap. We will extend it to the right. The market has closed the candles just inside the fair value gaps, which we could see. Watch it. And at that point, we also had an order block. This was an order block just above the fair value gap. So let's say if we had placed our stop loss above the order block, and if we had took the entry on this fair value gap, the market would have worked exactly in our favor and it would have given us a good risk to reward ratio. And how it fell down from that point, you could see it by yourself. I could further show you examples of the sniper entries using fair value gaps in the downtrend. So guys, we are having another example of the downtrend, as again it was a downtrend for the very short period of time. The change of character has happened at this point, which we could also call break of structure. The market broke it to the downside, and then we would have to measure this whole move. Give me a minute. Let's say from the high to the low, it was the move, and we clearly are in the premium area as it is the 50% area of the wave. Remember this point, this is the 50% area, not this. And here we are having an order block which we would have considered for entry purpose in the market. There are two things out here. The first one, it is just above the order block. The second one, it is just below the first order block. So now we are having lots of confluence out here as the market is has break the structure to the downside. We measured the move, we were at the premium level, premium area, and then there appeared a fair value gap which is just adjacent to the order block. So we would have took entries at this point. We would have placed a stop loss above this order block, and we would have targeted, you could say, the this order block which was not filled initially, or let's say we could have targeted this order block as well. That would have been our profit target. So guys, that's it for today, and see you in another session. Take care.